Good morning, everybody. This is Alex, Senior Account Executive at GDMFX with your European Session Outlook. We'll start with the North American markets. We had the GDP index for the first quarter 0.1% worse than expected at 0.6%, and the GDP annualized 0.1% worse than expected at 0.8%. We also had personal consumption expenditure prices for the quarter as expected at 0.3%, and the core data, also quarter on quarter, was as expected at 2.1%. We had Fed's Yellen speech on Friday. In remarks in Boston, Yellen said a rate increase in the coming months would be appropriate if the economy and labor market continue to improve. Yellen says unemployment rate is close to its goal, but she says there's not much improvement in wage growth or in number of part-timers who want full-time work. Productivity growth is miserable, Yellen says. That's a serious and negative development, she said. Federal Government Powell on Thursday discussed the anemic productivity numbers at length. Wage growth will be a primary focus as inflation continues to improve, though it remains below the Fed's 2% target. So the Dow Jones on Friday until today is 7 points up. The Nasdaq ended 17 points up on Friday. The Dixie is up to 95.94 from 95.17. That's a big move. The USD CAD ended 55 pips up. USD Swiss franc the same. And the USD JPY ended 47 pips up. Today is actually Memorial Day in the US, so it's a holiday, no events. And then from Canada, we have the current account for the quarter. And by the end of the week, we have on Wednesday the ISM manufacturing PMI from the US and ISM prices paid. And of course, the most important event is the NFP. This Friday is going to cause a lot of movements, most likely. The EU markets were also focused on Yellen's speech on Friday, with the DAX and CAC both ending slightly higher. This week, the main focus in Europe will be the Eurozones CPI data tomorrow and the interest rate decision, which will be on Thursday. For today, we have the German CPI month-on-month, year-on-year, and harmonized index of consumer prices month-on-month, year-on-year. So basically, inflation data from Germany today. The Euro USD is currently on a major psychological level and will need to look for a direction with the market news ahead. Onto the UK markets, the sterling has further room to recover, analysts are saying, with the Remain campaign in the Brexit referendum leading steady in the polls. The pound has recovered some of the ground it lost this year, adding 0.8% last week and 1% the week before. The FTSE 100 closed to the downside and closed at 62.48 on Friday, and the 10-year gilt yields closed at 1.48% on Friday. The events for this week will be the Tier 2 ones: manufacturing PMI, consumer credit, mortgage approvals, and PMI construction. All right, on to the Asian and Pacific markets. In Japan, we had Japanese retail trade seasonally adjusted month-on-month, 1.5% worse than previous at 0%. And the year-on-year is 0.2% better than previous and 0.4% better than expected at negative 0.8%. The large retailer sales 0.2% better than previous. And Abe told the fellow people at the summit in Japan that there is a significant risk of the world economy falling into a crisis on the scale of the 2008 financial crisis if the right policy measures aren't taken. That's fueling speculation that Abe will soon announce a delay in the consumption levy to hike to help support spending. A sales tax increase led to a recession in 2014. The Australian dollar fell for a fifth consecutive week, making for the largest losing streak in 10 months. The currency succumbed to both external and domestic headwinds. US rate hike expectations continue to swell, undermining the Aussie's relative yield appear. Meanwhile, Royal Bank of Australia easing bets began to rebuild following suggestively dovish commentary from Royal Bank of Australia Governor Glenn Stevens. More of the same seems likely ahead. The interest rate decision for the Aussie is on Tuesday next week, and until then, we'll be looking at this week's data, which is Tuesday. We have the AIG Performance of Manufacturing Index. On Wednesday is the GDP, very important, quarter-on-quarter and year-on-year. Thursday, we have some inflation data and trade balance, and that would be all from Australia. On to commodities, we had the Baker Hughes oil rig count. It fell by 2 to 316 in the latest reporting week, keeping up a broad trend of declines. Gold had a range of $17 down to $12.02. Friday's NFP should affect gold significantly. Silver had a range of 24 cents at $15.94 now. Crude oil had almost $1 range at $49.11 now. And natural gas is trading at $2.14 at the moment with a range of 9 cents. Alright, that was all for today. Thank you for the attention, and I'll see you next time. Goodbye.